Imagine waking up one day to find that the world's economy is at the brink of collapse. A black swan event that no one saw coming. In this video, we will explore how Japan's economic crisis can be the catalyst for a global recession and how you can protect yourself. Japan's economic pressure cooker. Japan's economy has been a ticking time bomb, with the government and the central bank manipulating interest rates and monetary policies to maintain stability. The Bank of Japan has kept the interest rates near zero since 1999. But as Nassim Taleb said, these measures come at a price that you must eventually pay. By the way, I would really recommend reading the books from Nassim Taleb, including The Black Swan. The myth: Japan's economic success. Over the years, many economic experts have pointed to Japan as a model where low interest rates can coexist with low inflation. However, the reality is far from rosy. Japan's real GDP grew close to zero over the last 5 years, while the Japanese stock market grew by 67%, actually 150% from the bottom to the top. Something doesn't add up here, right? The heart of Japan's economic woes lies the carry trade. The Japanese carry trade sell off. Investors have been borrowing Japanese yen at nearly zero interest rates and investing in the US stocks and US bonds, pocketing the difference. Seems to be an easy trade, right? According to the Bank of International Settlements, the total loan as foreign currency is over 40 trillion yen, which is over 270 billion US dollars. And hedge funds have been highly leveraging this trade, creating over $200 trillion market in this carry trade market. Free money will haunt you. The Japanese carry trade seems to be like a genius move until it stops working. The narrowing yield between Japan and the US, combined with the potential rising interest rates in Japan, has turned this free money into a very costly mistake. If the Japanese yen against the US dollar goes up, or if the Japanese yen rates rise, then these Japanese dollar loans will be much more expensive to repay. And that's why traders are now unwinding these Japanese carry trades. Concerns about Japan's economy affecting the world. Japan's economy is a puzzle, and when you connect the dots, it becomes pretty clear that it's a huge mess. The near zero GDP growth, a government debt to GDP ratio of 263%, accelerating inflation, and the aging population. The median age at the moment in Japan is 48 years old. Japan is basically at the brink of collapse. And 33% of Japan's government spending goes to social security and pension, and the working population has shrunk by 20 million over the last 20 years. The contagion to the US and the world economy. Japan's economic weight in the US is really huge. Japan is the number one direct investor in the US, US companies, US securities, stocks, and so on. Is the number one foreign employer in the US. Japanese companies employ over 550,000 Americans. And there's also the number one exporter in the US. Japanese companies in the US are responsible to export over $100 billion annually. So a Japanese implosion could devastate the US market, lead to a rising unemployment in the US, and trigger a housing collapse that could resemble the 2007 financial crisis. Another housing market collapse? Another housing collapse? Yes. So basically, the unwinding of the Japanese carry trades could trigger a massive sell-off of US Treasury bonds, causing mortgage rates to skyrocket. Bond prices and yields have an inverse relationship. And bond yields are 93% correlated to mortgage yields. This would cause an immense stress on households to pay off their mortgage loans. The economy will contract, and the housing market can implode in the US. Here is what you can do. So, here is what you can do. In the face of this market volatility, potential panic, and potential sell-offs, it's very important that you stay calm and prepared. First, stay away from the noise. Stay away from short-term price volatility. It doesn't matter. You need to zoom out and see the big picture. Second, avoid leverage. Please don't use leverage when investing unless you are investing in certain ETFs. Third, diversify your investments and aggressively save money and cut expenses so that you can have more cash to invest during this period. Use the crashes as an opportunity to buy solid assets at a discount and considering doubling down carefully as if you believe that stock or a crypto is worth investing in. All right, that's all for this video. Join the Be Limitless community to have insider tips on how to profit from the recession. Don't just watch the world economy implode. Take action now. I'll leave the link in the resources section of the video. The Japanese economic crisis can be a black swan event that could have far reaching consequences for the global economy. But by you understanding the risks that we have at the moment in the market, you can take a proactive approach to this and navigate the upcoming storm and earn from it. Earn by taking advantage of this opportunity, by not panicking, and by buying the dip. All right, that's all for this video. If you enjoyed, give it a like and subscribe, and I'll see you on the next one.